All right, let's see. You guys got my screen now? Good. Okay, so there were some questions earlier. I got some guys that are starting the that Talent LMS site for the various structured courses in the learning management system, and so we've got them going through the lessons and recommending that they use this modified Cornell note-taking sheet as a structured way to take notes. We would put the lesson and the course number up in here, anything that you've done forward in preparation phase to carry forward into that lesson. You would list the key concepts, processes, triggers, names, labels, that kind of stuff in this section as a quick reference. In this middle section in the notes, you would put all of the structured notes that you need, including references to other presentations or lessons or reference links, whatever. The idea is to get a one-page control sheet for each lesson. Then in a course, which is going to have more than one lesson, you have one note sheet per lesson as the master controller, and then you synthesize that into a single sheet for the whole course. And in that way, you get this almost flashcard style approach. In the synthesis area, you would be making notes to yourself about how this ties to other blocks of instruction or things that really reinforce with you what it is. You would make notes to reference elements of psychology, systems, and markets, so self, system, and market, that integrated holistic process that is you. And then in the action blocks, you would put some notes to yourself that you're going to add to your action journal. So things that you know you got to take care of, and that you're going to migrate to your packing list, your to-do list, if you will. This is the here's the blank form, and so this is all on the blanks are on Patreon already for you, and we're embedding a version of this briefing into every course that's in the learning management system. Okay. So let's take a look at today's trade. So here was the situation yesterday. We had these 2 days in a row that ended up on 264, and we said the market was still in a critical state. Is it going to revert back to the swing low? Is it going to take this as the pause that refreshes and takes off? Well, what we had was kind of a vote towards the upside. It didn't break through much, although at the very end of the day it did take out the top and then closed well. So this was a half step in the direction of back to long-term fair value up here around 300. Getting through it got through and stayed through the Bollinger Band mean today, and that was important. Crossed the RL90. Next target after it breaks out of a new 10-day high here at 276, that would be an auto buy going towards 290, which is Z1. That's the far side of the river. Then we would have a successful P1. Well, we've actually already had a successful P1. So you have the RLCO outside the river. It has crossed, made it all the way to the Bollinger Band and held with a close above the Bollinger Band mean. That is a successful P1. So we can just bank on that. And now, so with the closure here at 274, what I'm looking for is votes to the upside would be 276 3/4, Z1 at 290, fair value at 306, Z2 at 314, the 30-day high at 318, and then the hump of the dragon way up here at about 335. On the downside, what we have is the daily low at 264 or 265. That's really and also the 2-day low and the Bollinger Band mean. That's pretty strong price indication. Then the Monday opening at 258. So this is still favorable because we're above that opening. We have the southern skin of the dragon here at 254. We have the 10-day low at 243. That's a strong support level. And now that's higher than the belly of the dragon, which was also a strong support level from the weekly charts, 237. Then we have, I'm trying to remember this is the PSAR flip here at 231. the original PSAR flip at 225, which also is the RL10 bottom of the trough, and then there's then the 30-day low at 217. So we have a pretty robust price ladder in both directions. We're still right in the middle of it, right in the middle of the river, swimming for our lives in Crocodile River. But today was a vote to the upside. On the MACD histogram, we've made it through the Red River in spring, and now one more day of gains, and we should be crossing the line into summer. And then that would be the next leg would take us to the upscale. So we have still a fraction of a short side bias because we're still in the spring, so we still respect the power to the downside. But today, these last 2 days were a vote up as a net result. Today kind of negated yesterday, traversed the same range, but voted to hold. Let's see. All right. In the let's see what we got here. Let's start with a little sector review. So we had the S&P at plus 3.36. Diamonds were a little bit better today at 3.4. Yesterday it was kind of just the other way. So they're still pretty tightly closed. This is a market-driven environment right now, and the large caps are clearly, the show. Today the Dow was just a little bit better. Boeing and lumber improved. Finance and healthcare were both better. Caterpillar and the small caps were better. So the small caps at 4.5 were about basically 1.5 times better than the S&P. So the S&P is 3.36. The small caps at 4.56, so maybe 1.5 better. U.S. Steel at 4.6, continuing its good run. I'm going to go through that one in detail. I got out of that one today. I felt like the run had been done, and I shifted back to the Dow. And I'll talk you through that. So Brazil and XLB were both good today. Oil, Cliff, Chevron, Energy had a nice vote back up 6.7. The UDow up 10% and Win at 13.5. On the downside, below the S&P, Alcoa Cisco Tech is lagging a little bit here. Mexico. So now we're seeing a divergence between Mexico at 1.6 and Brazil at 4.7. So that's an important differentiation there. McDonald's and Home Depot were up, but were lagging the market. Emerging markets, EFA were lagging, Walmart was lagging, precious metals were lagging, Japan was lagging. So it's really, today's story was the U.S. and the U.S. large caps, healthcare, finance, and energy. So that was sort of the way to go. And I'm sorry, basic materials was the only thing lagging behind energy. And energy is so volatile and vulnerable to oil that, to me, the safer play, the better play is the basic industries right now. They're basic materials, XLB. So just while we're here, let me get this one off the screen. This is Danny's been doing some great work with the TC2000 bundle, and so I just want to show you here real quick. We're starting to build out the tutorials on how to use the TC2000 bundle. The screens that I'm showing you are from my layouts for TC2000. He's basically automated the entire daily report and weekly report in many different systems, all in a very nice integrated way. I think he's done a great job here. And he's been recording some of these 3 to 5 minute summaries on how to use them and how to apply them. So we get the market mosaic layout. That's basically page 1 of my daily report. The swing trade layout view basically takes the mechanical and discretionary systems and lays out different signals and filters and screens, easily easily adapted. The long-term blended monthly rebalancing layout, uh, very nice work there. That one alone is probably worth the price of the bundle, since if you've got the TradeStation implementation, that would cost you $5,000. The only thing TradeStation does that this TC2000 won't do is the portfolio backtesting with parameter stepping, but in terms of operational design, that's pretty nice. The Tortoise NDX indicator layout, so there's a layout on how to do it and in the different time frames. The regression line fractal framework layout, which is an entire lens of looking at symbols through that layout. The overbought, oversold, and RSI layout, Bob Rourke loves that one. And then layouts that emphasize the MACD Four Seasons look, so for filters and whatnot. So he's done a really nice job of putting all that stuff together. And then inside the learning management system, we've got 20 different courses built out so far. And this is just the TC2000. I call it version 0.8 because we're still just building that thing out. But the psychology one's coming along really well. I just built 2 of them last night that take the last 5 years of daily market health checks and daily market reports, and building an archive database so that folks that want to research different strategies and want to practice trading it forward, you can go into there to the date of interest and pull up the daily report and the daily market health check, so you can kind of see what that all looked like on the day of receiving the signal. So there's some real power in being able to trade forward the way that you propose to trade. So that's what I want to say about the learning management system. It's coming along pretty well. All right, next one up. Let's just jump right in. Stand by. Why isn't that? Yeah, stand by. Let me prepare that screen a little easier for you. Hmm. Well, all right, we'll just go with it. All right, so here's U.S. Steel. And so this is part of the we've been swing trading and turbo trading this thing for a while. So we got the original swing trades in this back around under $6, and we know that the range stat is about 90 cents in this thing. So when we see a low of the day over here, when we see a low of the day like at 645, then we know that this thing can get to 740 today if we're not careful, right? Boy, that's bright. Okay, so that's how we would study that one. All right, so we got a belly of the dragon built there. Now we've seen a peak of the RL10. Now it's rolling over. Second hump up. Oh, I'm sorry. So that was at the start of yesterday. So this is the start of today. Right. So what we have is, forgot I put the context in there. So that's where it closed yesterday, and I want to just draw that. All right. So we've got the belly of the dragon that has two different bellies right in here. So that is sort of reinforcing the idea of that being the a significant low for today. You could even go as far as the RL10 down here, but I'll just start with the belly of the dragon, particularly when it's going to open up here. So this is a way that you might start thinking about, um, framing the geometry of the day. That's yesterday's VWAP drawn across. So any price north of that is going to be interesting to us. All right. So we have what starts off as a slight gap up. So that's yesterday's VWAP and where it closed. And then today is a gap up opening. And then the VWAP comes down to here. It makes a low all the way down at the yesterday's Bollinger Band mean and at yesterday's RL270. So it bottoms out here and then starts crossing up to its own VWAP again. And that's enough to get me in with a stop. Let me draw this. So my initial stop on that would be like, right here at the moment of opening. So at the like underneath the RL 270 or let's call it the PSAR right there. Any execution risk right about there is reasonable. Crosses through the VWAP with strength, rolls over and comes back to the VWAP, and that just looks like a reasonable place to take that first trade. That's about maybe a half of an execution arc. Could you be a little quick? I don't know. That's still pretty good right there. I like to get the first one in the bag. I was tempted in here to go short, but because I have a long swing on this one and the market was generally up, I was neglecting the short side. I was interested to see where it would bottom out, and so it bottoms out here. So now you have the belly of the dragon, and then a higher low here, and it crosses back over the VWAP. So now I'm interested in getting long. So now I've gotten back in at the place where I got out, and it's as if I still have the original trade on. Okay. And a fractional loss when it rejects. Now, what seems significant to me here is the declining highs in the RL10s. So you have the PSAR flip. So this is a quick exit. Now the next interesting question to me is it going to come down and test the RL270? Yeah, on a better day, if other things weren't happening, if I had a bi-directional bias, I wouldn't mind that one. You can feel my disappointment. Meanwhile, it bottoms out here, crosses the dragon, and consistent with my long bias for the day in U.S. steel, and the fact that XLB is better than the market. I go ahead and get long here. Again, my execution stop on this would be pretty tight. Something like, maybe 5 or 6 cents per share is what I'm risking. Okay. So that's what that would look like. And I want you to notice you have the PSAR flip here as well. Now it feels pretty good. You have a low. Now you have a higher low at held. This one, it feels like this held at the VWAP. starting to flatten out a little bit. The Bollinger Band lines compressed and then expanded a little more. And then, so right around in here, I'm stalking for another entry. And now by this time, I've got to have my stop at least right to about here. Okay. Because that's going to protect the investment of those first two positions. So by this time, I'm stalking a third one, but the more important idea is that my initial risk, which was here, and then maybe it gets to here and then here, and by the time that second position goes in, and as soon as it breaks out of this sideways, I can get to no lose. I can start moving up, and now right about here is where I want to be. Okay, so that's U.S. Steel. While all that's going on, here's UDOW. We'll go through this one a little quicker. So this, let's get to 4 o'clock. So that was the last of the day from yesterday for a little bit of context. And now here's the recent belly of the dragon from yesterday carried forward. And then let's draw this one from the VWAP. Whoop. Sorry about that. And here's where that VWAP open. Dang it. Here's where that VWAP opened up. So we have a peak of the RL10 pretty quick. And it had the RL10 peaks at the VWAP and then starts to roll down. Now it makes this looks to me like a collapsing dragon below the VWAP. So I'm short with this one. And then my stop would be just above that original VWAP where the hump of the dragon. Okay, so my stop is right about where that yellow dot is. Failing nicely. It comes down and makes a new low of the day, and crashes through the previous hump of the dragons twice, and this original PSAR flip. So I get a second short, then it crosses up, and I cash here because that second one is already losing money. And then if I get back to the green line, then that whole position is a scratch. So I end up wasting that entire move. So that's, if the second one doesn't work right away, scratch the whole position. And in this case, I take the RLXD. The rest of the market is starting to feel pretty good. And now this feels like it's coming to the VWAP and beyond. So I'm long there. It rejects the VWAP, so I just make a little fraction on this one. And now you notice you have the PSAR flip below the VWAP. And now the Z3 lines have pinched because we are now an hour into the day. Excuse me. It doesn't fail further. It stops and crosses the dragon again. So I re-enter when it takes out the hump of the 10 and the VWAP. And now my stop is going to be down here. below the belly of the dragon. So again, not much of a risk. It's about a 50 cent execution risk. It crosses back over the dragon, so I take a fractional loss. Now I'm noticing this peak of the dragon here and the RL10. That feels significant. So it's had a couple runs and could not get above the opening VWAP. It had a couple tests of it. It couldn't really make a new high yet. And then now the new VWAP is down here. So when that is on the wrong side of the VWAP, I don't stick around much. And then immediately change my mind. So now we're buying back at fair value. So a couple, here's a false start. So a gain, a fractional gain, a fractional loss, and now we're long again. I add my second position here. When it has cleared the Z3 excursions here and has taken out 1, 2 previous RL10 humps, here's the third one, and it cleared the previous hump of this dragon over here, and it's above the original VWAP. So that's sort of the justification on this excursion, is that it is leaving all of this behind. And now the next target is yesterday's VWAP. Third position in routine. Now this feels like the move of the day. And now you can feel how the expanding volatility is moving in our direction, and the RL 270 is rolled up. And right here, notice that we did a spring, summer, fall. It rejected winter right in here at the VWAP, rejected winter, and became summer again. So summer, fall, summer is instant long. That was yesterday's lesson. Breaks above the VWAP, free and clear, second position. Now notice here we have a summer, fall, and we're getting right back into the summer again for the next excursion up, and now we can get 2 more positions in. Now, if it breaks above yesterday's VWAP, this thing could really go. This is where we take the low of the day, we add a range stat to it to determine what the upper reasonable limit move of the day is. And then now we're not going to lose any money. This is going to be a nice win. Okay. Let's see. This is Alcoa. So this is pretty much the same kind of pattern. It starts off right from the open, little gap up, buy it, make a fractional gain. It had one chance to make some gains, and we got paid a little bit. I tried short because it came up, rejected the VWAP, started going down, so I give back what I made here. And then it immediately reverses, makes a higher low, so a low, a higher low, re-entry above the hump of the dragon, up, finds support at the Bollinger Band mean, takes out the previous Z3 excursion, second position long, and now by this time on this pullback, I like XLB, I like Alcoa, I like US Steel at this time. So at this point, I just lock in my gains here, and I'm just going to wait and see whatever is going to happen. So those 2 positions plus this move is going to make Alcoa a winner today. Here's the Russell. So the Russell closed here. It sold off, so it sold off twice. So a high, a low, a lower high, a lower low, and collapsing again. So short, and then a fractional gain here. Whoop. And this is going from winter. Wasn't much of a winter. This move from here to here, that was from winter to the start of spring. It gets through the Red River by here and into the summer by this moment. And so we've got our 1 position in from here. Crosses the VWAP and holds. That feels good. I waited to see it clear this hump of the RL10 and this hump of the dragon. So we get that second position here. By now I'm using the Z-1 edge of the river as my stop all the way up. So we get one position in, two when it clears all this, three on the next expansion when it takes out this Z3 line, third position in. By this time, as it starts rolling into lunchtime, 11:45, and starting to give me a little sideways, and now we're in right on the cusp between summer and fall, I just jump my stop up to here to the PSAR and hold it. So that's going to be three positions in the money. I like it. This one, we're back to U.S. Steel. So now this is kind of the rest of the story. So the U.S. Steel move, we ended up getting, by the time that thing started moving, we got a third position in and then cashed at lunchtime in the usual way on the RLXD. So a three bagger locked it in. This one came down, it found support at the RL270 and started to roll across the dragon again. There's a PSAR flip. We're above the VWAP. We went from winter into spring, and we're starting to make a run at summer. So buy it. Buy a second position when it breaks out above the Z3 excursion. And now when it gets up into here, and you can see it's making some gains almost at 1 p.m., I lock in my wins at 690. So the original leg was 675, then adding at 687. And the risk on this one is about 5 cents. That's 680. The PSAR flip is at 675. So that's 5 cents of execution risk. On per share, right? So that's U.S. Steel. So we locked in $6.90. This one shows. So this is kind of the life cycle. Now what I want to do is, this is where we're talking about core and turbo and adapting to multiple time frames of what's going on. So all day, you know, the VWAP from yesterday was down here and then raised up to here on the open, and then has, during this climb, the VWAP was rising on pretty good volume, and it stayed that way all the way during the day. This was the point of maximum excursion. So our exit up here, going into lunch at 1 o'clock, when the PSAR happened and the RL270 happened, that locks in two really good legs up. And now notice how the RL270 is just going to roll over, and now the move from here back to the VWAP ultimately happens by the end of the day. So this is the transition from pure tactics to an operational consideration. When it was in this sideways choppy stuff, this is where I shifted my intraday money from U.S. Steel, this position, over to UDOW, because I felt like materials had started to stall. All of the components had really, really good runs. U.S. Steel's gone from $5.80 to $7. So that's a 20% gain to that intraday peak. And I didn't want to give back all of this stuff. So that little exit there preserves those gains and protects that open profit. By this time, this sell-off was much bigger than the sell-off I was seeing in the broad market. So this felt like profit taking. And this is where the guys stopped taking profits. And that's about where it finished all day. So this was pretty much dead money the rest of the day. I didn't know that at this time, but it just felt like, based on sector analysis and market analysis going back 10 and 20 days, it just felt to me like this was done. And then in the afternoon, there was that late. At this point, I decided that the swing position in U.S. Steel I want to maintain, because even when it closes here, it's still up 4.5% for the day when the market was only up 3%. So there was buying pressure in here on U.S. Steel. So I don't mind holding that. That's just a noise retracement for a swing trade. But there was no more room left in this for tactics. At the same time, this is what's happening over in UDOW. So in UDOW, we'd had it wasn't as clear in the morning. In fact, we had the first one short, and then a fractional win, fractional loss, and then we finally got those three. I stayed in UDOW all day, and then finally took this one off. So that closed out that whole position. Now around this time, because this sell-off was not as big as the one in U.S. Steel and an XLB, I shifted my attention over here. I tried one long, it at a fractional loss. It didn't. It held support at the VWAP, so I tried it again, and cashed a win coming into the end of the day. And the market really closed well. I didn't get any of that, but I'm pleased to see that there were people willing to buy it well above the VWAP to hold for tomorrow's gains. So that really felt good. And now what I've done is I've made the transition from a very narrow stock in a narrow sector in a broad market to the broad market itself. So conceptually, when I stack those two things together, this top row here is UDOW and the different phases of the day. So nice run up, a sideways with a minor give back, and then the rest of the afternoon was a positive event. This is the same time frame now in U.S. Steel. Stronger in the morning on buying pressure in that symbol, but then it gave back almost right to the VWAP where this didn't. And so this was chunking sideways. And even in this section, the market started moving, but left XLB and U.S. Steel behind, and U.S. Steel suffered while the market followed through strongly. So this is sort of the that relationship between market and sector and company. So if I had another section here that showed XLB as an intermediary, then you would get a feel for that relationship between market, sector, and company. But this was me making a decision that run was so good that it was good chance it was done, and so I rolled money over to XLB or to UDOW, which added another 3% in here, whereas this basically gave back 1.5%. Yeah, so that's the picture of the Dow. Now I want to talk in this one. This is a yellow belt test. All right. So for those of you following along in the chat room, Lisa's kind of getting back to basics. And what I told her was she's going to learn to make bricks. She's going to learn to make bricks. And I told her to turn her candlesticks into bars, open, high, low, close. So we turn off the color. And then I told her, I want you to go back so that there's 40 bars of data on your chart. So each one of these vertical blue lines is 10, 20, 30, 40 bars of data. And then from the highest high to the lowest low, I want that distance to cover about 2/3 of your screen's real estate so that we can see what's happening in the price bars. Because the candles that she had on her chart, everything was so tightly compressed, you couldn't get it was too compressed for fine detailed work, right? And so to do that, she's going to have to scrunch down the MACD histogram piece till it's only about 15% of the screen, because all you really need to see in here is the season. You don't have to have as much fidelity here as you need up here in the price action. So now here is her yellow belt test for tomorrow, and you can play along. So she's got to find the range stat on DIA, because this is for the ETF, for the Dow 30 Industrials. If you can trade DIA structurally and geometrically the way we're doing it, then you can trade UDOW and SDOW, the leveraged ETFs. You can trade the futures with leverage. But it all derives from the price action of this great big fat ETF. So we're learning on that one. Okay. So that's kind of what I want her screen to look like. So her craftsman's quiz for her yellow belt is, what is the range stat on DIA? Range stat, again, is the maximum reasonable intraday move. It's the average range of the last 30 days plus one standard deviation. That means that 85% of the time in the last 30 days, it didn't move farther than a range stat. So that's what we're counting. 5 times out of 6, it won't maximum reasonable intraday move. Are we saying it can't move? No. We're just saying that if it moves beyond that, that would be an abnormal move. But anything short of that would not be unusual. That would be a normal move, anything less than a range stat. So I told her for the craftsman's quiz, and this is on hourly charts, by the way. If DIA opens tomorrow at today's close, which is right up here at 234.33, what is the upper and lower price limits of the maximum reasonable move? So what I'm asking her to do is find the range stat and then add it to 234.33 and subtract it from 234.33 to come up with what tomorrow's reasonable move would be if it opened at exactly where it closed. Now, the next trick on this one is no matter where it opens, plus one range stat and minus one range stat from that opening whistle is the maximum reasonable intraday move. So that's going to be an exercise in geometry. Next, describe what you see at each of the blue numbers. So there's 17 of them. So number 1 is here. Number 2 is here. Number 3 is the combination of 1 and 2. What do you see? 4 is here in that blue circle. 5, 6, 7, 8, and then collectively 9. What's going on there? 10, 11, 12 is this yellow region. 13, 14, 15, 16, and then 17 is this text box where she has to answer those questions. Okay, so that's the yellow belt test for tomorrow. That's everything I wanted to cover for tonight. It's 45 minutes in. The daily report is still computing in the background. I've completed the markup for the speed run, but I'm going to record that next and hang it as a separate file. I just got to tell you, I was so tired this afternoon that I took a 3-hour nap because I've been working hard and I needed that nap. And part of the reason to go from U.S. Steel to UDOW was that I just didn't have the energy to keep fighting inside a company, inside a sector, inside the market. And if I was going to take a nap, I was willing to take a nap on the Dow 30 with my stop in rather than U.S. Steel. So that was part of it. So time, will, pattern, and money. I slept like a stone. Part of that was I was just up way too late last night listening to John Prine. He passed yesterday, age 73, and it was just necessary to listen to a bunch of John Prine music last night, so I took care of that. So there we are. The rest of the stuff will be coming out shortly, but you have what you need here. And I'll get this posted, the speed run posted, and the daily report as soon as we can. But it still remains a market situation here. The market is in charge. The U.S. large caps are in charge and voted to the upsides. We're not out of the woods yet, but we can see Emerald City ahead. But this is where Dorothy and the three travelers were most at risk from flying monkeys. So we'll be mindful of that, but we will be fearless in going forward. So take care of yourselves. And Lisa, I see you're in here tonight. You have your yellow belt test. Today you made a brick. You made a brick today. And all you got to do is keep making bricks. So take those words to heart. I sent you a note inside the chat room. It was about whittling, and I want you to read through that and think about it, and keep that in your mind too. Okay, so take good care, guys. We will see you in the chat room. Take good care of yourselves, and off we go.